Good afternoon, students. Today we will see a new module, that is, from the first module we started with how a journal entry is to be prepared, that is journalizing, how a posting is to be prepared in the ledger accounts, that is posting and then balancing, isn't it? Posting and then balancing, that is the ledger accounts part. Then the third module is what the no, not that way. First module it is introduction to the accounting. Second module is the journal or journalizing. The third module, what is that? Ledger. And the fourth module, that is the balances from the ledger need to be put in one statement, as the case may be, that is the trial balance. And we are going to finalizing this thing, that is the final accounts of companies. Okay, the or final accounts. That is the trading account, the profit and loss account, and the balance sheet. So the accounts with regard to the main thing is trading account, P&L account, and the statement, that is the balance sheet, that denotes the financial position of the company. So we will start with the what is a trading account and what is a P&L account and what is a balance sheet. So we will see today what is a trading account. So I'm going to share with you the fifth module regarding this, that is so here just they are putting some transactions like that, nothing more than that. So this is C, the module is financial statements without adjustments, means you people need to study without adjustment only one adjustment it will come, closing stock. The rest all you need not study, only the that is the basic with regard to. So the first part it is ignore it. We will start with the this area. See, the importance objectives of accounting are to measure the performance of a business in terms of the profit or loss and to ascertain the financial position. So, performance of the business in terms of the profit or loss. So, two things you need to identify: financial statements, fifth module. Under that, what is that? Performance of the business. Whether it is profit or loss. Profit ആണോ loss ആണോ എന്നറിയുന്നതിനും and also the financial position, ascertaining the financial position of a company or business. So these two things, important objectives of accounting is to measure the performance of a business in terms of its profit or loss and also to ascertain the financial position of the company. Keeping these objectives in mind, financial statement consisting of income statement and position statement are prepared. So, two statements or income statement, that is statement of profit or loss. That is income statement. Okay, അതൊരു അക്കൗണ്ട് ഫോമിലാണെങ്കിൽ ട്രേഡിംഗ് ആൻഡ് പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ടും പിന്നെയോ പൊസിഷൻ സ്റ്റേറ്റ്മെന്റ് ഏത് പൊസിഷനിലാണ് നമ്മൾ നിൽക്കുന്നത് എന്നുള്ളത് അതിന് ബാലൻസ് ഷീറ്റ് ആണ് പ്രിപ്പയർ ചെയ്യുന്നത്. സോ income statement is traditionally known as trading and profit and loss account and position statement is known as balance sheet. Both these constitute final accounts. The main source of information for preparing the final accounts is the trial balance. Thus, trial balance forms the major source document for preparing financial statements. So, trial balance എന്ന് പറയുന്നത് എന്താണ്? From the balances extracted from the ledger accounts, that is the trial balance. ആ ബാലൻസിനെയാണ് എന്തിനകത്തോട്ട് എഴുതുന്നത്? ട്രേഡിംഗ് ആൻഡ് പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ടും അതുപോലെ ബാലൻസ് ഷീറ്റ്. അസറ്റ് ആണെങ്കിൽ ബാലൻസ് ഷീറ്റും, എക്സ്പെൻസ് അല്ലെ ഇൻകം ഐറ്റം ആണെങ്കിൽ as the case may be, it comes in the trading or profit and loss account. Clear? So the financial statements include, see, the trading account, the profit and loss account, and the balance sheet. So what is a trading account? We will see what is a trading account first of all. Trading account is the first statement to be prepared in final accounts. Its purpose is to ascertain the overall results of the trading of an undertaking. So, at a glance, എന്തുമാത്രം പർച്ചേസ് ഉണ്ട്, എന്തുമാത്രം നമ്മുടെ കയ്യിൽ സ്റ്റോക്ക് ഉണ്ട്, എന്തുമാത്രം വിറ്റുവരവുണ്ട്, ആ പിന്നെ ആൾക്കാർക്ക് വേജസ് കൊടുത്തത്, ഇതൊക്കെയാണ് ഡിഫറൻസ് ഇൻ ബിറ്റ്വീൻ ദ ട്രേഡിംഗ് അക്കൗണ്ട്. സോ it is the financial statement that is to be prepared in trading account is the first statement that is to be prepared in final accounts. Its purpose is to ascertain the overall results of the trading as an undertaking. Then its meaning. Trading account is an account prepared to find out the result of buying and selling of the goods and services. It gives the gross profit of the gross loss of a business, which is the difference between the sales and the cost of goods sold or cost of services. So sales is the main item, with the deducting from the sales the cost of goods sold. സാധനം വിൽക്കുന്നതിന് വേണ്ടിയിട്ട് വന്ന ചെലവും ആ വിൽക്കുന്നതും തമ്മിലുള്ള ഡിഫറൻസ് ആണ് ഗ്രോസ് പ്രോഫിറ്റ് അല്ലെങ്കിൽ ഗ്രോസ് ലോസ് എന്ന് പറയുന്നത്. മേ ബി ദ ഗുഡ്സ് കോസ്റ്റ് ഓഫ് ഗുഡ്സ് സോൾഡ് അല്ലെങ്കിൽ കോസ്റ്റ് ഓഫ് ഗുഡ്സ് സർവീസസ് റെന്റ്. സോ how a trading account is to be prepared, or for what is the need for the preparation of trading account? Ascertaining the gross profit or gross loss, അത് കാൽക്കുലേറ്റ് ചെയ്യുന്നതിന് വേണ്ടി. പിന്നെ enabling the management to make a comparison of the gross profit or gross loss with that of the previous year. Management helpful for the management to make a comparison of the gross profit or gross loss with that of the previous year. And third case is ascertaining the different ratios such as GP ratio, ratio of cost of goods sold to sales, etc. പല ratios കാൽക്കുലേറ്റ് ചെയ്യുന്നതിന് വേണ്ടിയിട്ടാണ്. ലൈക്ക് അക്കൗണ്ടിങ് റേഷ്യോസ് ഉണ്ട്, അതായത് ഗ്രോസ് പ്രോഫിറ്റ് റേഷ്യോ എന്ന് പറഞ്ഞാൽ ഗ്രോസ് പ്രോഫിറ്റ് ഡിവൈഡ് ബൈ ടോട്ടൽ സെയിൽസ് ഇൻറ്റു 100, അതാണ് ഗ്രോസ് പ്രോഫിറ്റ് റേഷ്യോ എന്ന് പറയുന്നത്. അപ്പോൾ so how a gross profit is to be calculated? Gross profit is equal to net sales minus cost of goods sold. ഈ ഫോർമുലാസ് ഓർത്തിരിക്കണം. So GP is equal to net sales minus COGS, cost of goods sold. അപ്പോൾ net sales എന്താണ്? NS എന്ന് പറഞ്ഞാൽ net sales എന്ന് പറഞ്ഞാൽ total sales minus return of the sales. നമ്മൾ വാങ്ങിച്ചത് തിരികെ കൊടുക്കുക, അതാണ് which one? Net sales. അപ്പോൾ COGS എന്ന് പറഞ്ഞാൽ cost of goods sold എന്ന് പറഞ്ഞാൽ opening stock plus purchases plus direct expenses minus closing stock. So cost of goods sold എന്ന് പറഞ്ഞാൽ ഓപ്പണിംഗ് സ്റ്റോക്ക് തന്നിട്ടുണ്ടാകും, പർച്ചേസസ് ഉണ്ടാകും, പിന്നെ ഡയറക്റ്റ് എക്സ്പെൻസ് ഉണ്ടാകും. ഇതിന്റെ മൂന്നിന്റെയും കൂടെ ടോട്ടൽ ഇന്ന് ക്ലോസിംഗ് സ്റ്റോക്ക് കുറച്ചാൽ കോസ്റ്റ് ഓഫ് ഗുഡ്സ് സോൾഡ് കിട്ടും. നെറ്റ് സെയിൽസ് എന്ന് പറഞ്ഞാൽ ടോട്ടൽ സെയിൽസിൽ നിന്ന് സെയിൽസ് റിട്ടേൺസ് കുറയ്ക്കുന്നത്. ഇനി നെറ്റ് പർച്ചേസസ് എന്ന് പറഞ്ഞാൽ ടോട്ടൽ പർച്ചേസസിൽ നിന്ന് purchase returns. So these are the things that you need to be taken care by preparing the trading account. Formula for calculating the gross profit is equal to net sales minus cost of goods sold. Net sales is the total sales minus sales return. Cost of goods sold is the opening stock plus purchases plus direct expenses minus closing stock. And net profit is equal, net purchase is equal to what is that? Total purchase minus purchase returns. So നമുക്ക് പ്രോബ്ലം ആ രീതിയിലുള്ളത് ആദ്യം ചെയ്യാം. Following relate to a concern for the year 2002. Opening stock 15,000, purchases 36,000, purchase returns 1,000, direct expenses 4,000, sales 82,000, sales returns 2,000, closing stock 12,000. So what we need to require? Gross profit calculation we need to check it. So GP is equal to net sales minus COGS. Net sales is equal to total sales minus sales returns is equal to TS, means what? Sales 82,000 minus sales return, it is 2,000. So 80,000 is the net sales. Like the same, net purchases also we need to, because there is purchase return. So total purchases minus purchase returns. So how much it is total purchases? 36,000 minus how much? 1,000. So 35,000 is the purchases. Then comes COGS. What is COGS? Opening stock plus purchases. Purchase in the sense means net purchases plus CL's direct expenses minus closing stock. So opening stock is equal to 15,000 plus net purchases is how much? 35,000 plus direct expenses, it is given in the question as 4,000 minus what is the closing stock? 12,000. So 35 plus 15, how much? 35 plus 10, 45 plus 5, 50, 54. 54,000 minus 12,000, how much? 44, so 42,000 is the what? COGS. Cost of goods sold is equal to, what is that? 42,000. Then we can see we are applying this thing to that formula. GP is equal to NS minus COGS. NS is net sale 80,000 and COGS is 42,000. So therefore GP is equal to how much? 80,000 minus 42,000. Okay. How much it is? See, 38,000 is the gross profit. So GP is equal to 38,000. Clear? So what all things are there? Gross profit is equal to net sales minus COGS. Net sales is equal to total sales minus sales return. That is already in the question. Net purchase is equal to total purchases minus purchase return. That is also in the question. Then we apply COGS, opening stock plus this net purchases plus direct expenses minus closing stock. We got it as 42,000. Apply this in the formula. NS is the net sales minus COGS. That is how much? 80,000 is the net sales and COGS we calculate 42,000. So the difference, that is gross profit. Clear? This is how gross profit is to be calculated. Next is how a trading account is to be prepared. Trading account is prepared by debiting the account with opening stock, purchases and expenses directly connected with the purchases and the production, and by crediting the same with the sales and the closing stock. Difference between the total of the debit side and the credit side of the account gives the gross profit or the gross loss, as the case may be. If the credit side is total, credit side total is more, difference is gross profit, and if the debit side total is more, the difference will be gross loss. Up entries so first case, debit things. What are the expenses that is to be debited? So trading account debtor to opening stock to purchases to direct expenses. Simple. See, direct expenses like carriage inwards, wages, and other direct expenses. Ini sales means on the credit side. This is on the debit side. On the trading account credit side, what is there? Yes, sales is there. Sales debtor, closing stock debtor to trading account. And finally, if there is any gross profit comes, means credit side total is high, there should be a balance in the debit side, that is gross profit. So trading account debtor to gross profit. Ini gross loss on GL account debtor to trading account. Only that is the treatment with regard to, for the, what is that, preparing the trading account. See, for the amount of sales, sales account debtor to trading account. For the amount of purchase returns account debtor to purchases, and sales returns account is there, then sales account debtor to sales return, and then closing stock account debtor to trading account, and trading account debtor to P&L in case of profit, and if it is a gross loss, then what is that? P&L debtor to trading account. So general pro forma for the trading account is this one. See, opening stock, purchases less returns, direct expenses, then sales less returns, closing stock. Take the difference. If the credit side total is high, when rather than the debit side, there will be a gross profit, and vice versa. If the debit side total is high, it will be a gross loss in the credit side. This is the format for this one. Okay. See that problem, this problem, how it is to be there in trading account. That I will explain it to you. This is the same problem. This is the T form account. There is the trade T form with both the sides amount column, isn't it? That you are aware, and ledger folio column like that. Then so debit side to opening stock. How much is the amount? It is 15,000. To purchases inner column, because there is what returns also 36,000. Either you can debit the purchase and purchase returns to be credited, like the same sales to be credited and sales returns to be debited. Better to adjust it, less returns, that is 1,000, so 35,000. Then after that, to direct expenses. What are the direct expenses here? Only one direct expenses, isn't it? Purchases 35,000, the direct expenses 4,000. Direct expenses 4,000. Then by sales, how much is the amount? 82,000 inner column, less returns 2,000, so 80,000. Then by closing stock, how much is 12,000? Then any more item? No, 92,000 is the total. Then 35 plus 10, 45 plus 5, 50. Okay, 54,000. 54,000 minus 9, this one, 92,000. How much it is? So 35 plus 10, 45 plus 5, 50, 54,000 minus 92. So it is 38,000 is the total. So 2 gross profit carried down. That is this is the format for a trading account. Clear? We will see more problems with the trading account. We will do it just after a brief description of some of the items. So, relevant items in the trading account. The items that come in the trading account are opening stock, sales, purchases, closing stock, and direct expenses. No more items are there. So, opening stock, purchases, less returns, and direct expenses to be debited, and sales and closing stock to be credited, and take the difference, that is the gross profit or gross loss, as the case may be. So, we will look into this more. What are these things? So, opening stock. From the name itself, what? At the time of opening the business, what is the stock prevailing? That is the opening stock. So it is the book value of the stock brought forward from the previous year. It may consist of raw materials, partly finished goods, and finished goods in the case of manufacturing concerns, whereas only finished goods in the case of trading concerns is to be taken care. It is the first item of the debit side of the trading account that you see in the format, isn't it? So to opening stock or opening stock. Then purchases. It refers to the goods brought for resale. It forms the major item of expenses in trading account. Only net purchase is shown in the amount column. That is the purchases less returns. Okay, purchases less returns. That is to be shown in the which column? Amount column. Then net sales means what? Like the saying, sales minus sales returns. The net figure only should be shown on the credit side of the trading account. Then closing stock. It is the amount of goods remaining unsold at the end of the accounting year. It is shown on the credit side of the trading account, and the same will be the opening stock for the next month or next year. അതാണ് ഓർക്കേണ്ടത്. ക്ലോസിംഗ് സ്റ്റോക്ക് എന്ന് പറഞ്ഞാൽ നമ്മുടെ കയ്യിൽ അവശേഷിക്കുന്നതായ, വിൽക്കാതെ നമ്മുടെ കയ്യിൽ അവശേഷിക്കുന്നതായ ഗുഡ്സ്, അത് നമ്മുടെ ക്ലോസിംഗ് സ്റ്റോക്ക് ആയിട്ട് ഈ മാസം അവസാനം എടുക്കുകയും അടുത്ത മാസം ആദ്യ ആ ഐറ്റമാണ് ഓപ്പണിംഗ് സ്റ്റോക്ക് ആയിട്ട് വരുന്നത്. Clear? That is the closing stock. And direct expenses. These include expenses which are incurred in the purchasing the goods, bringing them to the business premises, and making them fit for sale. That is finished products ആക്കി മാറ്റുന്നതിന് പ്രൊഡക്ഷൻ പ്രോസസ്സിന് യൂട്ടിലൈസ് ചെയ്യുന്ന എന്തെല്ലാം ഉണ്ടോ ആ ഇത്, അതായത് അത് റോ മെറ്റീരിയൽ ആയിട്ട് കൊണ്ടുവന്ന് അതിനെ ബിസിനസ് പ്രൊസസിലേക്ക് കൊണ്ടുവന്ന് അതിനെ മേക്കിംഗ് ദം ഫിറ്റ് ഫോർ സെയിൽ. അതാണ് all the direct expenses denotes. Such expenses are debited to the trading account and following are the sum of the direct expenses: carriage, cartage, and freight. These are direct expenses on the purchase of goods and are debited to the trading account. These are also called carriage in or cartage in or freight in. അങ്ങനെ അറിയപ്പെടുന്നത്. If such expenses are paid on sale of goods, they are carriage out. വിൽക്കുന്ന ഇതിനാണെങ്കിൽ പിന്നെ അതിന്റെ പർച്ചേസ് ചെയ്യുന്നതിനുള്ള ഇതാണെങ്കിൽ direct expenses, that is carriage in or cartage in or freight in. So that is the one item with regard to carriage, cartage or freight in direct expenses. So carriage out, cartage out and freight out, and they are therefore charged to profit and loss account because it is for the sale of the goods. Next is another item, wages. Wages paid to the workers who are engaged in the production of goods are direct expenses and are debited in trading account. If wages are clubbed with the salaries and the item is given as wages and salary, that is usually debited in trading account. If it is given salaries and wages, it should be debited in P&L account. അതാണ് രണ്ടും തമ്മിലുള്ള വ്യത്യാസം. വേജസിന്റെ കൂടെ സാലറി ക്ലബ്ഡ് ആണെങ്കിൽ ട്രേഡിംഗ് അക്കൗണ്ടിലും സാലറിയുടെ കൂടെ വേജസ് ക്ലബ്ഡ് ആണെങ്കിൽ P&L അക്കൗണ്ടിലും അതാണ് എടുക്കുന്നത്, ഡെബിറ്റ് ചെയ്യുന്നത്. Wages paid for construction or installation of an asset are to be treated as capital expenditure and hence debited to the asset concerned. Next is customs and import duty. Duties and other charges paid on import of goods are debited to trading account. അതായത് ഗുഡ്സ് ഇമ്പോർട്ട് ചെയ്യുന്നതിനുള്ള കസ്റ്റംസ് ഡ്യൂട്ടി അല്ലെ ഇമ്പോർട്ട് ഡ്യൂട്ടി അതൊക്കെ that all direct expenses വരുന്നതാണ്. All should be debited in the trading account. Then the royalty. These are the payments made for using the right of other persons. Amount paid by a publishing company to the author of a book, manufactured to the patentee, etc. are royalties, and the amount of royalty is debited to the trading account. If the royalty payable on the basis of sales, it is charged to profit and loss account. Purchases in the case എന്തെല്ലാം charges വരുന്നോ അതെല്ലാം direct expenses ആയിട്ട് എവിടെ കാണിക്കും? Trading account debit side കാണിക്കും. If it is payable on sales basis, then it should be on the basis of sale, it should be in the P&L account. Then gas, electricity, water, fuel, power, etc. Also all direct expenses chargeable to the trading account. Then packing material. Packing materials used for packing the goods purchased for bringing them to the shop or converting them to a saleable condition are the direct expenses and they are charged to trading account. But packing expenses incurred after the product has been sold or for making the product look attractive are indirect expenses and that are to be charged to profit and loss account. All the direct expenses that are to be debited in trading account, all the thing that is related to the indirect expenses that is charged to P&L account. Then consumable store like the cotton waste, grease, engine oil, etc. are direct expenses and is to be debited with the trading account. Factory expenses like factory rent, factory insurance, factory lighting, factory heating, etc. all are chargeable to trading account. So from this, we are going to prepare what is that? This following related books of a trader as on 31st December 2002. Opening stock, sales items are given. So how we are going to prepare this? Let's check it. Trading account. So to opening stock, how much is the amount? 14,000. To purchases, 36,000 inner column, less returns 3,000. So 36 minus 3, 33,000. Then what is that? To carriage inwards, sorry, wages is there. Yes, wages 4,000. In the order it is coming in this way. Then to carriage inwards, how much? 2,500. to manufacturing expenses 1600, then comes to power and fuel 1400, try to do 10. By sales, inner column it is 92,000 less returns. How much it is? 2,000. So 90,000 by closing stock it is 15,000. So total is how much? 1,05,000. Okay, 1,05,000. Then how much? 48 plus 33 plus 4 plus 2.5 plus 1.6 plus 1.4. So that there is a difference of what? 48,500. That is what? 2 gross profit carried down. So 1,05,000. Look, opening stock, one item, purchases less returns, then all these are what? Indirect expenses like wages, carriage inwards, manufacturing expenses, power and fuel, etc. And what is their sales and less returns, then closing stock is there. So we will do one more program with this and we will wind up the session because too much problem is not there. We will do it including the trading account, P&L account in the later classes. So one more problem. See, prepare a trading account for the following item: purchases, opening stock, sales, carriage inwards, wages, closing stock. So, trading account. To opening stock 9,000. Then to purchases, there is no returns. To purchases, it is 41,000. Then by sales, it is 75,000. Then to wages, 2,000. To carriage inwards, 1,500. By closing stock is there, closing stock 12,000. So 75 plus 10, 85 plus 2, 87,000. So we will look at that. 41 plus 9, 50. 41,000 plus 9,000 plus 3,500. 53,500 minus 87,000. So 33,500. See, answer is correct. 2 gross profit carried down 33,500. Okay, so this is the case with regard to the trading account. Okay, so today we discussed whatever things. So today we discussed what is a trading account and how the entries are coming, or what are the ingredients with regard to, or the contents with regard to a trading account. What is that? Opening stock is there, purchases less returns is there, and all the direct expenses to be for the production process. That is towards the finishing structure of a particular product. That is under this one, direct expenses. That also should be debited, and the credit side it goes for the sales less returns and the closing stock. The balance portion we will see it in the next class. So please have a look at today's topics. Please do as much as problems also, and please do previous sessions problems also, because this then only you need to be by heart in doing the problems. And please confirm after seeing the video. Thank you for the day.